Greetings, members one and all of the Salivation Nation. Gold is creeping upwards. It has been for a couple of days now, despite a strong dollar. Let's explore and find out some of the reasons why this is the case. This is an article from fxstreet.com. Gold continues to climb higher towards 1310 despite the strength of the U.S. dollar. After making a decisive break above the critical $1,300 mark yesterday, the U.S. dollar index continued to push higher and touched its highest level in nearly 2 weeks above 1307, gaining more than $3 on a daily basis. Earlier today, the data from the U.S. showed that the core consumer price index, which strips volatile food and energy prices, increased 2% on a yearly basis in March to come in lower than the market expectation of 2.1%. Other details of the inflation report showed that CPI came in at 4.4% on a monthly basis in March, following February's 0.2% reading. Despite the mixed data, the U.S. dollar index recovered above the 97 mark at ECB. President Draghi's cautious remarks this is the European Central Bank President's cautious remarks during the today's press conference reminded investors of the economic slowdown in the euro area and weighed on the major European currencies to help the greenback find demand. So it's one of those cases where typically the U.S. dollar does do well, but when there's sentiment, when the dollar does well, typically the dollar is pushed backwards. But in this case, other financial markets and from the European Central Bank and other activities around the world could have a negative effect on gold, a positive effect on gold, but really not hurt the dollar. The dismal market sentiment caused the 10-year T-bond yield to push lower today, allowing a traditional safe haven such as the precious metals to gather strength. At the moment, the 10-year T-bond yield is down nearly 1% as markets are waiting for the FOMC to publish the minutes of its last meeting. After the sharp drop in the dots, market will be looking at just how dovish the FOMC has become in the release of the March minutes on Wednesday, TD Securities said, previewing the FOMC event. And really, we kind of know what the Fed's going to be doing for the rest of the year. They're not going to be raising rates. They're going to leave rates alone, and which kind of leaves the possibility that we might be on the precipice of either an economic downturn or slowdown. It looks like we are in some cases based off of GDP growth and other factors with the bond yield curve inverting. Those are signs that there's economic trouble ahead. Now, as far as employment and wages are concerned, well, that's not happening. But there's something to be said about jobs and job growth, and that is typically the lagging indicator. So that's the last thing to occur where things move in the other direction. The dollar is strong, but because of the European Central Bank, as mentioned in this article here, and not sure what's happening with the euro area. Of course, we also have Chinese, and China's economy is not doing so well, and Russia's economy. They're both getting a lot of gold and securing a lot of gold, I think partially because of those reasons. And Venezuela's selling a lot of gold. The technical levels, the pair could face initial resistance at 1312, which was the March 28th high, ahead of 1320, which is the March 27th high, and 1325, which is the March 25th high. The downside supports are located at 1306 and $1,300, which is a psychological level, which I thought we wouldn't get below that, but we did creep below that for a while. There's still some people who think that, these little things and the sentiment with the European economy, this is just today's sentiment. Who knows what tomorrow's sentiment could be on it? But let's examine these prices here. We see the ones that are scrolling at the top tend to be the more accurate reading here, but we've got silver is staying relatively stable under $15.30 at $15.26. Platinum is up $15 to $9.05. Palladium is up $3 to $13.92, and we're seeing it hold its own. Gold is at $13.08.78 now. So seeing these prices where they're at and what's going to be happening in these markets, I think is quite interesting. But they could change tomorrow. But if sentiment is where they think that it's going to be down the road, with these metal prices and where the economy, if we're seeing a kind of a sluggish economy, what we may see the metals slowly creep up in spite of a strong dollar because of where things are globally, and where 2019 may just mean a stable, stagnant economy where it is. Although I think that right now, even the economic and GDP stays below in the high twos, 2 point some odd percent, above 2.5%, and stays at that level, I wouldn't call that stagnant. I would just say stable economy. Especially if unemployment remains low and continues on course. But if it stays like that for a while, then the chances of it declining next year are probably greater than any inclination that could be seen. But a lot of that is going to depend upon, what happens around the world and any kind of sentiment along Main Street and Wall Street. We'll see what the stock market does, what the Dow does, and the NASDAQ and the S&P 500 from there on. But really, it's times like these where, the prices are relatively stable with these precious metals, so we accumulate them as we can, and we just continue going on as we have in the past, and that's all we can do. But it is interesting to see what drives these prices, and typically it is, as in this case, we can bet on the dollar index to help provide a role for the most part, but in times like today, that wasn't the case. But usually when there's outlying factors that affect gold and silver prices, they typically don't have an effect for long. Or, on the other hand, they may have an effect that could play a part in the dollar index in the coming days. If there's weak economic sentiment in Europe, that could have an effect on trade and resources that could have an effect on the United States, which could in turn affect the dollar, which is why another good reason to pay attention to what goes on around the world and keep that in mind. That's why I like to do videos talking about news and things like this, because I think it's fascinating. These are indicators. Each one of these are indicators as to what is could be happening, and either one of these factors could essentially cause a domino effect that could lead to a weaker economy, or they could correct themselves, and we could continue on with a stronger economy down the road. At this point, I think it's anyone's guess, although most analysts do feel like we are probably overdue for a recession, and it has been quite a long time since we've had one. As to what that recession will look like, who knows? But in the meantime, we accumulate gold and silver to protect ourselves in the case of economic instability. And all we can do is just move on with our lives, and our accumulation of these precious metals is why we do what we do. Buy while it's low, and hold on to it during those times of economic crisis. And if we have to sell them, well, sell them when they're high to take advantage of a higher price. But very interesting indeed. So this is a very rare case, again, where the dollar index may not necessarily drive the price. But I think in time, we will see it return to some normalcy where that dollar index does drive the price. And that could be tomorrow. We shall see. In any event, post your thoughts on what you think about this news. Very interesting. And what you think about the volatility of prices here on out, or lack thereof, could mean. Do you think that we're at that $1,300 for gold is going to be the new floor, or do you think it's going to creep back down below that level again? I think it could. And I also think that we could see silver continue to be stable or fall even more, perhaps. We'll see. Whether it goes below 15 is anyone's guess. I tend to think that 15 is a pretty hard floor, but I've been wrong about gold. We could be wrong about silver, too. Post your thoughts below. I'd like to extend a multitude of gratitude, y'all, for watching, and encourage you to please rate, share, comment, and subscribe.